of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, in a few minutes, I think in about 4 or 5 minutes, the Fed's going to be acting. Now, we have an order setting to buy the S&P at 40.60. That's the 382 retracement. We're going to use a 20-point stop on that. It's right into Feb time, but we sold the longs yesterday at 40.78 and said we're going to wait to see if we could buy it on a pullback. And it's very close to there right now. We're going to find out when these beepers start to go off here pretty soon. But we've had a nice run in it. You know, we can see there we sold that high up there. We bought the low yesterday, sold that out at 78. We bought it at 40.10 and sold it out at 40.78. So we made 90 handles on the way up, 60 handles. 90 points on the way down, 60 handles on the way up. And so what we're looking at now is we're going to risk 20 handles of that 160 handles that we made. Now, I don't know what's going to happen here, but you know what? When the Fed's in there, nobody else does. So that's the main thing. I got a rude awakening today, folks. As you know, I live up here in Tucson, Arizona. We have a lot of elderly people. When they moved in, they weren't elderly, but they've grown into that position. And some of them are not able to drive. And so Sarah and I do our shopping. And since Sarah is not here right now, she happens to be traveling with the grandkids, I do the shopping. So I went over this morning early, and she gave me $40 for the stuff. She said, this should be more than enough. And she had her list of stuff. And so I checked out like I usually do, and it was $62. And I said, wow, that's quite a bit more. So when I came back, you know, she said, did you have enough money? And I said, yes. Oh, yeah, we're okay. But I was shocked. The fact that it was 50% higher than last month when I did the shopping for her. I couldn't believe it. I mean, I know prices have been going up, but my goodness, that's just ridiculous. Now, if you're going to bear with me here, by the way, our guest today is Bill Meridian of Psychos Research. Always some good stuff. We've got some questions to ask him. He's given us some great things about the gold market, stocks and bonds, and I'm sure the stuff that he has coming up is going to be really, really great. So stay tuned for that coming in the break. What I'm going to be doing now with these next few minutes is we're going to see extreme volatility with the Federal Reserve in the market right now. We're trading at 470 in the S&P. We have a buy stop or a buy limit order at 40.60 with a stop at 40.20. We have to risk 20 handles because of the Fed out there. You know, anything could happen. What could happen here is we could take a move way up and then come back down again. I don't like to see that. But when I'm doing these, you know, I can only issue these videos out, you know, as I see them occurring, which giving you as much information as I have at the time. And that's pretty much, you know, what we're interested in doing. So it should be the next couple of minutes here when the Fed is going to act. And I wanted to watch how these markets are watching with you. So I can't post anything while I'm watching at the same time. So right now I'm seeing the S&P at 40.69. We've got the bonds at right around 30.28. And the euro is trading at 109.14. We got out of that with a small loss yesterday of $150. But the sting of that was taken care of by the great trade we had in the S&P. And then also we had a really nice long trade in the crude oil market that was also quite good. We'll be talking about crude here. But remember, we're going to have Bill Meridian coming on here in about 7 to 10 minutes. And the Fed should be acting right about now. I hope they're getting ready to say something because I don't want to act like a bear. Don't shoot the messenger, folks. If it doesn't happen, that's all I can tell you. So let's remind ourselves what we're looking at here. I'm going to give it another minute, and then if they're not doing it, I'll move on to the crude oil chart. By the way, the natural gas has been a question that some people have been asking me, and as soon as I do this, I know the Fed is going to be out there talking. But you remember, this was the natural gas that we've been watching for a very, very long time. We tried it once, and we tried it at 20.86 with a stop at 20.76. It's now trading 30 handles under it, folks, at 20 2.51, and it doesn't look like there's any bottom in sight. That's the bottom price. Let's take a look at this on this daily chart of the natural gas. I mean, I can see where we took a shot at it, which is okay. And I liked it at that point. But my gosh, look at it now. We're through every possible 1.618 A, B, C, D. It just keeps going down and down and down, and that's not what you really want to see it happening. So let's keep an eye on this, because maybe it'll bottom, but until we see a bottoming pattern in that natural gas, there is absolutely no way in Hades that I can enter, because I haven't any place to put a risk. There's no pattern in here. It's broken every pattern that you could possibly look at. I don't know why the Federal Reserve is taking so long. It's usually out by now, but they're just trying to make me look bad, which doesn't take a whole lot of trouble, Federal Reserve. Just remember that. Anyway, the buy we had it there is at 40.60. And, what if it gets hit and ends run? I'll put that stop back to break even as fast as I possibly can, if in fact that happens. So we'll be looking at it right here. Hold on one second here. Someone is trying to give me some information that we might be able to do. It says it's not going to be out until 1 p.m. Central Time. That should be, it's quite a ways away then. I'm sorry. Thank you very much, BV, for sending that in to me. Fed chair, 1:30 p.m. That shouldn't be Central Time though, Billy. That should be Eastern Time, because the Fed is in the East. They're not in Chicago. But I don't know. Well, they're not moving, so that must be it. Okay, let's move on here. A question that I had was about the crude oil contract that we had today. We had this was a losing trade today. I wanted to bring it to your attention. It was a perfect setup. Just looked like it was going to be just an absolute winner. And you'll get it up here and take a quick look at it. We had a beautiful A, B, C, D pattern right here. You can see it. Just a perfect Gartley setting right there at the 382. Bada bing, bada boom. The trade lasted the equivalent of about a blink of an eye, or 10 minutes, whatever you want to pick on first. So that's it. We'll see what's going on. Okay, now let's move on here to take a look what happened to the crude oil after that, because this is what I was interested in. After that market breaks like that, the first thing I do is I go down to my time frame that suits me for trading on intraday, which is 4 or 5 minute. And as you look at this pattern here, you can see two beautiful A, B, C, D patterns. There's your first one right here. There's your second one right here. And then look right here. What is that one, folks? Okay, Johnny, I understand. I misspoke your name, Johnny. Very sorry. Anyway, there's your 382 retracement, and look what happened after that. $1.20 a barrel, just straight down without any upticks at all. That's why these patterns, when they work great, and they work great short term, but when they're not working, stand out of here. Now, if this market would have gone up above here, this would have been a failed pattern, and it would have probably gone a lot higher. But we were trading with the trend. Look at this. Over the last several hours, this has all been down, and two beautiful A, B, C, D patterns right in between. You can't ask for anything better than that, folks. You really can't. Hey, stay tuned for Bill Meridian of Cycles Research, Vienna, Austria. He'll be right with us.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, so back we're speaking with Bill Meridian of Cycles Research. With any luck at all, Bill, are you with us?
Sure, I'm right here.
Good. Oh my gosh, you sound like you're right next to me. My goodness, what great technical connection we have today. Anyway, tell the folks what we're looking at today, Bill. You got some charts for us that you could post?
Yeah, I'm starting. Let me know when you see it.
Okay, they'll give me a big heads up when we can see it. And how's your weather there, by the way?
It is cold and wet.
A lot of snow?
No, up in the Tyrol in the north, yes, but down here in Vienna, no.
Okay, good.
So can you see my screen now?
I can't see it quite yet, but it should be. There we go. She's up and running. So go right ahead, my friend. Please continue.
Sure. Well, the summary, the S&P from the last time, the downtrend line in the S&P was unbroken and had been capping any rallies or turning them back. So the S&P followed the cycles, which I'll show you, and finally broke through that barrier. So now I feel it's got some room to run, so the market is headed higher.
Okay.
Bonds are a little bit tricky. February is not a strong. February is about a flat month. It's weak for the first 3 weeks and strong only for the last week, and the dynamic cycle is pointing up. So the conclusion is a very moderate rise in bond prices and most of the rally occurring in the last week of the month. And gold is just, I think I've got a target of 2050. It's running. The next weak month is March. So I'm retaining the gold long positions. Oil I sold on Friday because I didn't, there's essentially nothing real special about oil now. I think it'll trade back and forth in sort of a 77 to 80 trading range until we get through the first week of February. And of course, we're in the January to May timeframe that is the most bullish. So I am bullish, and I think we're probably at the bottom of the range right now, and we hit 77, but there's no real reason to run out and take a long position right here.
Okay.
And now here's a bull market. Bull market and swearing, the number of expletives on corporate earnings calls per year. We're up. Look at that. You had a low in 2011, and it's been an 11-year bull market.
Wow. Holy cow.
So I guess they don't like the news. Well, it's a combination, I think, of deterioration in society and also reporting bad earnings. So
can I ask you a question, Bill?
Yeah.
Over in Austria, you have many friends there because you've been there a long time. How do they feel about the United States? Did they think it's a joke over here, or what do they think is going on? I mean that sincerely. I'm not trying to be cute or anything like that. I just like to know your opinion.
I know what you're asking.
Yeah.
Well, they overall think they have a far superior system over here. They thought George Bush was a complete idiot, and they're extremely liberal, and all their views are very biased. And I actually had I met an American woman here, and she said, well, I wouldn't want to, this was during the Bush administration, I wouldn't want to go back there, with what's going on now. I said, well, what's going on? And she said, well, with George Bush. I said, he's the president. What about him? Is he going to bite you in the leg? And, well, the Patriot Act and all that. And I said, well, do you know anybody? What is the Patriot Act about? Do you know anybody who's been hassled? But and she couldn't verbalize it. And that's the way it is. And so,
okay.
And I think they're a little embarrassed. They're liberal, but they're very embarrassed by what's going on, so they don't want to talk about it. And so, anyway, we have a bull market in swearing. If that's going to end, I'll recommend puts. Now, I use contrary opinion a lot, and this is from last week's Barron's. How to invest in China now, which is a sell signal for the stock market. I don't see it in the chart pattern or in the cycles or the seasonality, but in China, since I had some business over there, there can be obviously there can be COVID outbreaks, there can be political problems, there can be social instability. So anyway, these covers of the magazines work. Paul McRae Montgomery, my old friend from Legg Mason Wood down in Newport News, Virginia, was the grandmaster. He researched 3,200 covers of Time magazine and found out when there was an investment-related opinion on the front page, it went the opposite to that direction which the cover suggested 4 months later with an accuracy of about 80%.
Yep.
And if it were on a non-financial publication, in other words, if it made it to People magazine or Ladies Home Journal or whatever, the effect was multiplied because obviously financial publications have to have financial news. So now, if you remember, I said this might be a plus for tech. This is the Barron's cover from January, I think that's 10th or 12th. Tech's bill comes due. In other words, expenses are up, so they have to lay people off, and the revenue growth is no longer astronomical. It's just above normal. And I said on the show with you a month ago that this looked like a buy signal for technology. Well, here we go. The NASDAQ, this is for the month of January through yesterday, the NDX and the NASDAQ comp are up about 9%, leading the other indices.
Yep.
So it was a buy signal. And there was the date of the publication imposed on the NASDAQ daily price chart. Only missed the low by a couple of days. They only publish on Sunday, so they're not going to publish. They're not going to publish during the week, so it will never be exactly the low day. So here's the basic model is the 1-4 10-year cycle. On top you see the 1-4 and the 10. The 1 year, which is in red, is the annual cycle of the year. And this has been tested by the Financial Analyst Journal, by the PhDs, and they attribute it to, I think they call it seasonal attention deficit, or SAD, SAD. They describe it, but they can't explain it. And of course, the 4-year cycle is called the election year cycle. And as my old friend Ian Notley pointed out, they call that the election year cycle, but it existed before the creation of the Federal Reserve in 1913, so they couldn't alter elections prior to that. It exists in countries where there's a 4-year election cycle, a 6-year election cycle, or no elections whatsoever. So in other words, there's just a 4-year cycle. And then there's the 10-year cycle developed by Edgar Lawrence Smith at Ameritrade Bank way back in the 30s, in which years ending in 0 have the worst returns, years ending in 5 have the best returns, years ending in 7 always have some sort of a crisis or a market correction. And by the way, when you combine these, most lows have occurred in October and years ending in 2. Where did this market bottom? In October and a year ending in 2 last year. So below that blue line is the combination of the 3. And as you can see, it rallies up. So I'm comfortable up into April. That is it. The peak of that cycle is April 14th. And we have to sell something, Larry.
We have to sell something. The commercial coming up. Bill Meridian, Cycles Research.
Yep.
Be right back here, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, with Bill Meridian, Cycles Research. Please continue, my friend.
Yes, so we left off here with the composite of the 1-4-10-year cycle, which, as you can see, holds up until you get to September. It usually does decline, but this, oddly enough, shows a weak fourth quarter. For Q4 is where 60% of all S&P profits have occurred, or I should say all gains. If you look up to the upper strip, you'll notice the red line, which is the 1-year cycle, and the green line, the 10-year cycle, both are down. And so it does not look like we'll have a spectacular Q4 this year. And we'll now go, this is the monthly cycle. This is the actual dynamic cycle as extracted from the data as of the close yesterday. And as you can see, it's done an okay job here. Now, let's just go back one thought. Most lows occur in October in years ending in a 2. Look where this bottomed in October 2022. Well, now it's pointing up into April, which the other cycle is doing, so we do not have an annoying conflict here. We've got a confirmation. So this is one reason why I think the market is moving higher. Of course, you could throw in a lot of other ones. And here, now we did not have this breakout. The last time I was on, I think we were down in here, I think, around the 3rd or 4th. And we've now broken through this line. And the way this works is you can project from 3,500 up to that's about 700 points, the width here. And you could take it from here, you could take it over here. I prefer to be conservative, but that projects up to about 4,700, which is up here. So if we get 4,400, 4,500, I'll be happy, because you have very few, you got a good risk reward here. What do you have here? About 50 points on the downside, the potential of maybe 400 on the upside. That's an excellent reward risk ratio. So number one, you should be fully invested. And February review. From 1885 to the present, all Februaries have been up 53.7% of the time. The election year plus 3 years, which is the year prior to the election, up 67.7% of the time. The decennial pattern up 53.8% of the time. So combining the three, there's a 2 in 3 chance that the market will be up in February. So this is just a confirmation. Mm-hmm. Now here are bullish sentiment indicators. Margin debt. Look where it is. It's down at the levels of 08, 09 and the 2000, 2001 lows. People buy on margin when they are optimistic, and this is not optimistic. And CTAs have a low exposure to stocks. It's 0%. Wow. And U.S. equity allocation falls. Look where it is. It's down. The only lower allocations we see are 2005, 6, and maybe 2000, 2001.
Wow.
And now here's the U.S. retail flow. This is from TD Ameritrade in December, was near the lowest in the last 13 years. That is money flowing out of retail accounts from Ameritrade. So whether you look at CTAs, professional fund managers, or the individual, it looks very bearish. And of course, the best is if they stay bearish as the market rallies. We'll wait and see. And now the power of contrary opinion. I had this in my reports. 401 KO, average retirement count, down 25%. And what was the date? It was right here. That was about 2 days off the low. That's the New York Post.
Okay.
So, and
it's really contrary opinion at its best.
This is not a financial magazine, which Paul pointed out. So this has a double effect. The New York Post is a general newspaper. Mm-hmm. So that was a great call. Now, this is the Cycle Research stock screens, and I just updated. This should be 36 months, but the numbers are about the same. It's actually 36 months. The long stocks have risen by an average amount about 50, not 60% greater than that of the short sales, and about 26% over the Dow. And the short sales are down minus 8%. They had a very good month of January. So I can now run these and on any market, any group of stocks. And for the S&P, I did a back test, which in fact, I'm updating it now, but January 22 through September 2022, the longs are up 30%, shorts minus 36, S&P 500 minus 20. As I said, it's all being updated, but the numbers haven't changed that much. So here are the NASDAQ stocks to trade in February. Now, this is the seasonal rank. In other words, NVIDIA is the 6th best performing stock in the month of February. That's just going back and looking at all Februarys equally. The RSV is a specially constructed relative strength rank. add the two together, divide by 2, and get 6.5. It is best positioned for seasonality and relative strength. So, for example, two that I own. This is the old. This is Bookings. Bookings International. Is it the old? I forget the old company, the travel company that William Shatner did the advertisements for. They are ranked number 2 in seasonality. In other words, the second best performing stock in the NASDAQ 100 in February. And as of the close yesterday, they're number 14 of the 100 NASDAQ stocks. So that one I own. IDEX, I kind of stay away from medical stocks. I don't understand them. Then Win International, 24th seasonal rank, but second in RSV. And Win is also, I believe, if I remember correctly, a high cash flow generator, and so is BKNG. And if you go down here, look at this. Do you see Microsoft? Do you see Amazon, Meta, Intel? No, the only tech stocks you see here, and this is instructive, ABGO is Broadcom, KLA is they make instrumentation, ON Semiconductors. Then we have Applied Materials. There's the pointer right there. ADI is Analog Devices. And then we have Texas Instruments, Micron. This is LRCX, I think, is Lattice Semiconductor. And then we have Microchip. Look at the number of the strength in the NASDAQ is in the chip stocks. And so I actually own ADI, and as I said, I have Win, and I have BKNG. Now, Tesla stocks to short. Tesla, NASDAQ shots. NASDAQ stocks to short in February. Don't say that too fast. Tesla, 96th seasonal rank and 91st relative rank. Groupon, Illumina. Now here's Google, Microsoft, and Amazon. Here's Intel, which just reported bad earnings and got hit again. And if we go further down, we will run into Meta, which is right here. And here's Apple. So those are the bottom. Those are the bottom 25.
Wow.
So the semiconductor stocks, I already made that first point, and the second one, the chip stocks that were highly rated in the NASDAQ screen below, well, actually it's now above, are NVIDIA, Broadcom, I just mentioned them, KLA.
Wow. We've got to pay a few bills, my friends. Stay with us, please.
Pay the bills.
Bill Meridian, Cycles Research, folks. We'll be right back. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Bill Meridian, Cycles Research. Please continue, Bill.
Yeah, so we were talking about semiconductors. Here is analog devices, ADI. It has risen 76% of the time from January 9th to June 9th over the last 42 years. Now, somebody on Wall Street, Larry will remember this, once said, if you can be right 60% of the time, you can make a fortune. We're starting off with 76% before we've even looked at it. And I'd like to explain this 3-up chart format was introduced to me by the late Ian Notley of the Notley Information Service. This is daily, this is weekly, this is monthly. Top strip, that black line is the closing price. The blue line is momentum, and the green line is the relative strength. In this case, it would be against the S&P 500. And in case you're wondering what that blue line is, 515.3 means it's a 5-period moving average minus a 15-period moving average, taken smooth as a 3-period moving average. And that was tested by the Notley system and found to work well, because that was a long time ago. But you will note the relative strength here. Daily bottomed in October, you see that here. But weekly, it bottomed all the way back in, that looks like April. And I once went from Abu Dhabi to Merrill Lynch, and I visited with Richard Bernstein, the chief quant, and I said, Richard, 6 months or 12 months of relative strength, which works best? And he said, we found it doesn't matter. And so to get 6 months of rising relative strength is really the precursor to a longer move. And he said, yeah, that's what the evidence suggests. So I always look for 6 months. Here you definitely have 6 months of relative strength right here. Mm-hmm. And here you can see it's just hit a new high, and look how oversold it is monthly.
Wow.
So that's why I have bought ADI. Now, here's Netflix, which obviously is not a chip stock, but it shows up in my screens. And here again, you see the momentum, and you can see the relative strength. You've got more than 6 months of positive relative strength. And I didn't draw it in here, but, you know, us technicians 101, you would draw a line here and a line here, and you'd have what's called an ascending triangle and a breakout here, which points from here to about here. That's about 100 points. So this is saying from the point of breakout, this should go to about 450. And right now it is at 350. So I don't know if it's going to go that high, but I'm looking for a 400 on this by April. Now, my favorite, Win International. Now, this is a classic screaming buy signal. It's a monthly chart. Look at the relative strength. It's been underperforming since 2014. And we are now in 220, that's 9 years. Rough rule of thumb, multiply that by 0.6, which is 0.6 times 9, and you're going to get about 5.4 years of relative outperformance. And the classic higher lows and momentum, exactly as Ian Notley taught me. And you've also got a breakout now. I already bought this, and now it's broken out It broke at first in relative terms and later on in absolute terms. That happens very frequently because this is more the green line is more the evidence of the very big funds and their activity. So that is also on the list of high cash flow generators, which is something I'll explain another time. And this is booking holdings. Now, what do these have to do? They're travel stocks, One International, booking holdings, the airlines and the cruise ships, and the MGM Mirage, they all look bullish, which tells you they're all confirming each other. So people are, I guess, trying to get away from the gloom and doom, where they're happy they don't have to wear masks anymore, so they're going out and they're traveling and going places. And here you see the relative strength was down for about 4 or 5 years. It has broken to the upside, very oversold. And this, of course, is another very big ascending triangle. So when it breaks through there, it's going to go, I think, at least to 3,000, which would be a 20% rise. It's another one I'm holding. And oil hasn't changed since I talked to you last. You know, January is a mixed month. February is slightly positive, but I'm looking for this, March, April, and May. And by the way, the red bars mean it's up. You read that over here. It's up almost 70% of the time in July, and price is up in March almost 65%. So we're all over 60 there. But to look at the stocks, we look at the XLE Energy ETF. And here we go again, January 4 to June 9, it's risen 71% of the time. From January 30th to March 5th, it's rallied 75% of the time. Both these readings are number one for all the sectors. In other words, this is above all the other sectors. And last time we spoke, I recommended Schlumberger and Hess, which you see down at the bottom. And here, this is the cycle. This is the oil, the commodity, and this is the stocks. And you can see this is, Death Valley is October, November for oil, but not necessarily for the stocks. That is September for them. And look at April. I mean, April is up over 60% of the time. The blue line is the average percentage gain. It's almost 4.5%. If you multiply the red value of 0.6 times this, which is about 4, you get expected return of 2.4%. So I'm into this with Hess and Schlumberger. You could easily just buy the XLE ETF. And I showed this the last time, but I wanted to show that there is confirmation. The commodity price is the top strip, gold second, oil third. These are gold is last, oil is second. These are the cycles monthly extracted from my software. They all point up. The point is they're confirming each other, which gives us an extra added degree of assurance. And real estate cycle has really topped. I keep presenting these and I keep coming up with new ones. KB Home, 6th largest home builder in America, experienced a 68% cancellation rate in Q4. That means home buyers canceled 68% of the homes that were under contract in the quarter. 1 year ago, it was only 13%. So the 18-year real estate cycle that I've shown so many times on your show has indeed kicked in a bit early. It kicked in last year, but it really peaks this year. And, of course, you can read me at Forbes.com, and the Foundation for the Study of Cycles has returned. We are at cycles.org.
So, you just did a big promotion with those folks. Is that available on recorded format?
Yes,
Bill?
just join. You have to become a member, and then you can get into that area in the website.
And the membership is only like $90 a year or something. It's very modest.
Very inexpensive, yeah.
Yeah, that's very good. I highly recommend that. I've been a member of that for many, many years, actually, when Dewey was still alive. Anyway, we have a question from one of our listeners, and that is, what is the software that you use to extract all these cycles and astro stuff out of it? Is there more than one program, or is it just one program?
Yes. Well, my own program is
more than one program?
Yes. My own program is Cycles Research Software that produces all of the quant and cyclical stuff. And I started with the Astro Analyst in 86, 88, then migrated on to a second software company, and then what came out of that was Timing Solutions by my friend Sergei Tarasov up in Canada. If I want to do anything planetary-wise, I use his software.
Timing Solutions, that's what Larry Williams uses. Can you stay with us one more segment, Bill?
Sure can.
Yeah, you bet. We'll be back with Bill Meridian.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, winding up with Bill Meridian, Cycles Research. Bill, tell the folks how they can reach you, and what is one of the questions we've had this afternoon is, what is the cost of your monthly newsletter that you have? Can you tell the folks a little bit about that?
Cycles Research early warning service is $300 annually. The rest of my work is all institutional. And you can get me at either cyclesresearch.com or billmeridian.com.
Okay, and the next question we have, when will you be coming back to the U.S. again?
May.
Well, that's a long way away, 5 months. That's how long will we be here, a few months?
Maybe a long time this time, because my wife hasn't had a holiday in a long time, and she and her girlfriend are going to France in the early part of May, so I can't leave before that.
Okay.
So I may stay for 6
good.
months, I don't know.
Well, I hope so. If you do, we'll have to get together, that's for sure. But I want to thank you for being our guest today, and we'll have you on again soon. Please stay warm over there, be safe, and we'll have you back as soon as you see something that you like. Please let me know. If an RSVP, we'll have you on instantaneous if you see something that needs attention. So Thank you very much, Bill, for joining us. You really enjoy this stuff, and it's really high quality. So thank you so much for being our guest today.
Thank you very much.
You bet. Bill Meridian, folks, Cycles Research. Now, folks, remember, I'm going to be doing the 3 o'clock show for Tom O'Brien today. We're going to be talking about some of these stocks that are in the news, Meta, Tesla, Apple, Google, some of these others that are very interesting. So stay with us at that time, and we'll be able to answer some of the questions if you do have. That number to call in is 877-927-6648. And remember, in a few minutes here, I believe we're going to have the Federal Reserve is going to be giving us some really good information. So we'll pay good attention to that. So that's one of the things that we want to be watching as we look at today. So live every day in an attitude of gratitude, and may God bless.